Alright, so in this video, I want to go over my trades for the week and also my closed trades for the week. So the profits from my option trades. So first of all, in my RSP, I've got 100 shares of IWM and 100 shares of Virgin Galactic. So I rolled my call option. So I bought Virgin Galactic at around 23.5 and I sold a call option at the same strike. Collected about $1 or something the first week. And now because it closed at 18.25, I rolled it to August 21st. So I went 2 weeks away, not just 1 week. At the same strike, decided to keep the same strike because that's my purchase price. I don't want to be stuck with a lower strike than my purchase price, which happens to me often. And I collected 31 cents or $31. For IWM, I picked the same strike of my purchase price, which is around 152. And I collected net credit. I collected about $1.40, I believe. If I go to orders executed, I should see it. Yeah, I collected $1.41. Because even though IWM is at 156, I don't care about capital appreciation right now because I don't trust the market. I think everything's gonna drop back. So I'm just trying to collect as much premiums as I can from this position. I already collected a lot of premiums. I actually wouldn't mind losing my shares at 152. So that's why I sold a call option at 152 strike for the next week. In my RESP, on the other hand, I still have 120 shares of Intel at 56 average price. It's trading at 48, so that's not good. I'm going to sell a covered call on it, but I'm not sure if I should go with, like I did last week. Last week I went with 49. I got lucky. It stayed below 49. But I don't know if I should go for a lower strike again this week, or if I should just go for 56 strike, which is my cost, but maybe go to September. So I haven't decided, but I'll sell something on Monday for sure. Just not sure if I'll do 1 week or all the way to September. Because now I'm down a lot. I'm down $6 on the stock. And the 56 strike has no premiums for next week or the week after. I have to go all the way to September just to collect maybe $30 here. If we go to options on INTC, and we look at the option chain, August 14, let's just look at calls because we're only selling calls here. You can see that the 50 strike for next week, I can get $16. But after commissions, I'm left with nothing. So I would have to go maybe to 49.50 or even 49 again. But it's only $1 away. So if Intel moves above 49 come August 14, then I lose my shares at 49 and my cost is 56. So that's the risk. So that's why I might just go to September 18, just accept that I'm in a bad position and I'm going to be only able to collect small premiums, and all the way till September, so almost 7 weeks just for $30. But at least if it goes above my strike, at least I don't lose below my purchase price. So it depends how I feel on Monday if I want to take the risk or not. In my TFSA, I'm all cash. I just don't know what to buy. I don't trust anything. In my margin account, I've got a bunch of earning trades that I had last week that I was not able to close. In fact, Google was actually 2 weeks ago. I wasn't able to close. In fact, let's go to the spreadsheet. So Google is right here. I had opened it July 30th for 95 cents before earnings. After earnings, it dropped a little bit, so I wasn't able to close it. This week, I think I could have closed it for like 60 or 65 cents, but I wanted to close at least for 50%. So I still own the trade. I'm still in it. I also did a put spread on Fastly. Collected 85 cents, was not able to close. In fact, Fastly dropped below my strike of 85, even below 80. So I ended up selling a call spread on Friday. So I opened Friday, August 7th for the same expiration as my existing put spread. Went with a 100-105 call spread to collect 59 cents. So now I collected 85 cents, 59 cents. So now my max loss is $5 minus these two amounts here, minus $1.44. But right now my goal is to reduce max loss, and if I can get out break even, then I'm happy because this is an earnings trade that went against me. So I've got a bunch of earning trades that went for me, but I'm obviously stuck with a few. So I'm stuck with Fastly, I'm stuck with Google, I'm stuck with LVGO. This one also went to 120, but I didn't sell a call spread on it yet. Collected 95 cents. I'm not able to close yet. TWLO as well went almost below 242.5 on Friday, but came back up. I think it's at 248 right now. Collected 80 cents, but I'm not able to close because it's very close. But so this one here, LVGO and Fastly, are causing me a bit of trouble. So I'm not able to close, and they might end up being losers. And so my goal is just to reduce max loss and maybe even get out for break even. So my trades for last week that I was able to close for the week ending August 7th, I've got my SPY put spread that I had opened Friday, July 31st. I closed it on Monday for 33 cents, so a good $74 profit. Now I didn't do any SPY put spreads this week just because it's ridiculous. SPY is flying. Although if I had done them this week, they would have been profitable as well. But I just didn't feel comfortable doing SPY put spreads when we're almost at all-time highs, when I think we're undeservingly at all-time highs. I did a earnings trade on TTWO put spread at 150, opened for 80 cents. I was able to close it for 13 cents. So this was a good earnings trade. It's a good profit here, $67 while playing it safe. I did an earnings trade on CHGG, 70 strike, opened for 80 cents, closed for 30 cents, $50 profit. I did an earnings trade on Activision, opened for 80 cents, closed for 34 cents, so $46 profit. And then Square, I did an earnings trade as well, 118 strike. It collected 85 cents, closed it for 33 cents, so $52 profit. I did an earnings trade on stamps.com at a 220 put spread, opened for 93 cents, closed for 40 cents, so $53 profit. I think this one I could have closed for a better price if I had just held on to it a bit longer during the day. Etsy, same thing. Etsy, I closed it before earnings. I opened it before earnings for 80 cents, and then before earnings was announced, it had already gone up a lot. So I closed it for 40 cents, so 50% profit, but $40 net profit. Roku was a put spread as well. Opened for $1, closed for 60 cents. And I think as well I could have gotten a better price if I had just waited, but whatever, $40 profit. Wayfair was another earning trade. Opened for 94 cents, closed for 45 cents, so $49 profit. And Roku and Etsy were earning trades as well, but naked position. So I did naked calls on them. So Roku, I went with a 245 strike, super far away. When I think I did this in my video live. If you watched my live options trading, the recent one, I did these trades live. So I opened for 20 cents and I let them expire worthless. So I didn't have to buy them back. So basically all these were profits. So I did 5 contracts on Roku at a 245 call strike for 20 cents and Etsy 180 call, 32 cents collected. I did 4 contracts. So profit here is $228 for both of these earning trades. So this week, total for this week is $699 US. And I'm stuck with these trades now for hopefully I can close them next week. They expire August 21st. So I still have 2 weeks to go on them, but depends what they do. And for next week's expiration for Friday, August 14, I've got a naked put on Uber at 30 strike and silver 23 strike for 21 cents. I did 5 contracts each. Reason I took silver is because it's on the list of highest IV stock or ETF. So I decided to sell options on silver. And Uber, it dropped after earnings, so when something drops I usually like to sell puts on it because I assume that it's not going to continue dropping. It should bounce back up. So I went 30 strike. I think it's pretty far. Uber's around almost $33 right now, and I collected 15 cents. I did 5 contracts, so this is not much. I think it's $75. This is probably this is $100 and this is $75 max profit, but we'll see what happens next week. I'm a little worried because things are looking scary, but we'll see what happens. And if they get tested, maybe I'll sell more puts on them at a lower strike because the IV on silver is really high, so it's a good time to sell options on silver. So this is gross profit $699. So commissions, now that's the annoying part here, is commissions. So these put spreads, they take about $13 in and out, and I've got 9 put spreads, so that's about 13 times 9. That's about $117 commissions just for the put spreads. The naked options, well, it's 75 cents per contract and $5 twice. So 75 times 9 contracts is $675 plus $5 for this one and $5 for that one, so plus $10. So it's about $1675 plus 117 is about 133 of commissions total. So if I remove that from $699, that's about $565 net profit. So it's kind of a lot. 133 divided by $699 just to see percentage wise what it represents. So it's about 19% of commissions. That's kind of a lot. And in fact, the put spreads is even higher. So put spreads, I spent about 117 on 471 gross profit. So 117 divided by 471 is about 24%. So 24% of the commissions, 24% of the gross profit went to commission. And then for the naked positions, I spent about $16, I think. $16 on 228 gross profit. Let's just see what percentage that is. So 16 divided by 228 is 7%. So yeah, you could see a big difference because I had to pay back to close them. I had 2 legs, so I'm paying 75 cents per contract, which is not bad, but I'm paying $5 to enter the trade and $5 to get out of the trade. Plus it's a small dollar amount profit wise. So that's why commissions represent a big chunk of the profits. If I did two contracts or 10 contracts, then it wouldn't be so bad. But obviously that would be too big for my account or too big for my risk tolerance. Now, I am thinking or considering switching to interactive brokers because commissions are too high, but I'm just trying to figure out the logistics. I mean, I really like Questrade's interface. It's easy to use. I don't think IBKR or interactive brokers will be easy to use for me. But I mean, the difference in commission is going to be crazy. The main reason I'm with Questrade is because I can leverage my TFSA. So I can use the capital of my TFSA to buy, let's say, TD stock for dividends. And it still gives me 70% of that amount as buying power in my margin account. So it allows me to do 2 things with the same capital. But I'm not even using my TFSA. My TFSA is all cash. So if I'm not using my TFSA, then the advantage that Questrade has no longer exists. So I might switch to IBKR for my margin account, but then that means I would have to switch my RRSP as well. I mean, I do covered calls with my RRSP. It would be great to save $5 per trade every time. But then RESP, I'd have to keep with Questrade because Interactive Brokers does not have an RESP. So it's just a matter of figuring out the logistics. But at the same time, I might just give up and just stay with Questrade because it would be easier to have everything in one place. Because if I only have my RESP, then I'm not going to have active trade. I'm not going to pay $89 a month for active trader pricing just for my RESP. But then that means I'm going to start paying $10 per options trade, so it's going to be expensive unless I change my strategy in my RESP and just buy a dividend stock, just buy and hold, never touch it, so that I don't have to worry about commissions in my RESP. So that could be a possibility. Anyways, let me know what you think in the comment section below. Just wanted to share with you my profits for the week and my trades for the week. So if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link in the description below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.